Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. First of all, I want to apologize if you're a VTF member. Our site was down for the entire day, and that never happens. I tried to tweet about what I was doing in the positions just to keep everyone involved. You know, a server went down, and our backup server went down, and the whole building was off. So it just, it is what it is. Technology, sometimes is a little faulty, I guess, kind of just like the markets. And you didn't really miss much because I was pretty much flat all day. I came in with 2-3 leftover longs from yesterday's reversal, and then once the market didn't show commitment to yesterday's move, I got flat, and some people flipped and got short or just got out of the way. Yes, it would have been better to flip and get short, but for me, I got out of the way, and that's 90% of the battle. Cash is a position as well. If you look at the chart of the SPX, first things first, we talked about when we closed below the 8-day. That was your sign or sell signal to clean up some loose longs. Also put you pretty much right on line with this upper trend line, the momentum trend line, which is what we trade. We don't trade macro trend lines. Usually we trade, more momentum or intermediate. So when you break the 8-day, you had a chance yesterday to, okay, I'm going to buy that dip. I'm going to see how it reacts, and it reacted well. But when we came in today, you did not know whether or not this reversal would stick. Was it just a tradable bounce? So I talked about 2050. That was the number. 2050 was the level. I said, if we're in a good market, we should hold that. That would show some commitment, some sideways action. And then you could have even looked at the 2040-ish area. We wound up closing at 2029. So I guess that was then, this is now. If you went out short, okay, probably the right thing to do considering the break here. I didn't. I'm going out flat, and we'll see what happens tomorrow. Okay, you have this prior high right there, okay, which is right around 2015. So into this area tomorrow, maybe we'll get another scalp type trade like we saw here, and we'll write down today's low, which will be the pivot 2024, and then the 50-day is right around 1997. So here is your next area. So if you sold a lot of your stocks and started thinking short in here, or got flat, or whatever you do for your style, this could be an opportunity maybe starting tomorrow morning. Qs also did not show any relative strength. This is tough stuff here, guys, I'll be honest, because, to have a reversal like yesterday, giving you some clues to be long, if you did not follow your retracement rules, you could have given it all back and then some. We talked about how the upper wedge broke up here, how it went below the 8-day. And if you got out there or got short, you were able to have a nice trade yesterday. And then today, same type of thing. Measure commitment. And there was none. We could really go back to the spiders for a second. And you could see, on the 5-minute chart, because I posted that, where that 2050 was. Just to show you. 2050 was right around here. Okay, and this is really, you should have been kind of your line in the sand. Okay, this wasn't so bad, considering where we came from. I would have thought it would have held higher. It hovered in here for the majority of the day, and if you were thinking, what, I have to have a tight stop, right there was your spot, right when it broke 204.73. And if you were trying to look for a short, and it broke that area, and congratulations, you could have made some nice money there. Okay, and then we closed here. So with that being said, this is the chart that we posted, okay, on the 5-minute version. So I wanted to just give you a little close-up view saying, what, I think we need to hold this 205. That would show some commitment. Actually, it would have been really pent up if we held this. Then you would have known that there was some momentum behind yesterday, not just a trade. And it didn't hold this, and it didn't hold that. And yeah, had a nice little, almost like, this is actually, this is Laz's H pattern, by the way, where you have your pole, it rallies up, and that's where you fade into resistance, you short some, and then you add as it breaks the bottom of the pole, and that right there looks like the letter H. And as technicians, that's what we do. We like to name things when things look like a certain object, or a bear flag, because it helps us remember it a little bit better. So back to the Qs. So now at this point, now the Qs are comfortably below the 8 and the 21-day. So what is Red Dog's rule? When the Qs or a sector or a stock is below the 8 and 21-day, you don't hold it as an active swing. You get out of the way and you look for some shorts potentially, and then if you do so, you get the luxury of embracing volatility and maybe finding a dip to buy and being tactical instead of being caught in it, Because if you were long, huge into yesterday's 18 handle down open, you probably think you wouldn't have thought clear enough to trade that bounce. You probably would have just tried to, salvage a trade. But anyway, go back to the Qs and you'll see that the 50-day on the Qs kind of lines up all the way with the prior high here. So, I would think that this would be very strong support. I kind of don't think it gets down here, but it might. What do I know? Here is your, what's it called, your 2-day pivot. So you'll see what happens tomorrow at 103.12. So write down 103.12, and then you have a few points of reference along the way. But here's the 50-day, and here's the prior breakout. This should be some solid support. And then, some of the stocks that reversed yesterday that gave you a good trade, you had to watch real close because one day doesn't make a new trend. It was just a tactical trade. If you kept the third, like I kept the third on a few of them, you just had to say, okay, made on 2/3, getting rid of a third, lose a little, a wash, and you should be fine. So anyway, first we'll go to Apple. I tried it a few times. It was a nice trade yesterday. This actually had a little relative strength, right? It's not back at the lows like I just showed you. The Qs are at the lows, the spiders are through the lows, so there's something here. But again, I'm not long it overnight. I took it yesterday because of the reversal. You had actually a little chime here. It was up 40 cents pre-market, and I think one of the tweets I said, I'm selling some Apple, but it looks okay, I'm gonna stay with some. And that was selling some strength. And then when it came back below the prior high, you could have used 114.30 as your sell. That's a little mini red dog reversal right there, or a mini sell signal, or when it went red, and then said, I will wait. So tomorrow we'll see how it opens. We'll measure it versus 111.54, okay, which is today's low, and then we'll see what happens here if it starts to, continue and, create a different type of downtrend, that at some point perhaps goes back to the upside. So with that being said, we like trends when they're above the 8-day, right? This was a really beautiful trend above the 8-day. And then it broke. Trade changes. You don't ride this anymore. Now you trade it both ways if you can. Okay, this was nice from the gap up after earnings. Look at that move. This was tight. That was the tier 2. If you remember, that day was a fun one. And now we're trying to figure it out like the rest of the world. Baba also had some overnight and really didn't, give you a trade. I tried to buy it once or twice to go green, and it just wouldn't. This was when, you had your breakout. Here was your red dog reversal high. This is when it broke the 8-day and the trade changed. Look, above the 8-day this entire time. Broke it here. You become tactical. Created that one wedge, remember, and then resolved it to the downside. And then, now you could draw this a little longer. Yesterday gave you a really nice setup. And this kind of like Apple's not through the lows. So showing you a little relative strength, but not enough for me to hold it. I would have liked to see it hold the top third. So we'll write down this pivot. We'll see how it acts tomorrow. I am flat this, and we'll figure it out. This too, has a descending channel here, and at some point it could break to the upside, but it hasn't happened yet. So try and just keep it a little smaller. Then, on the weaker side, the real weaker side, the stocks that are below the 100-day, the 200-day, the ones that gave you a nice trade yesterday, or maybe a one-day wonder, you had to have quick feet. And with Tesla, this was the trade, right? This was your trade yesterday. Today it opened down, and nothing really here. It's below all the moving averages. It's more of a short than a long, but it's oversold. So you'll see what happens if Tesla stays below. We were talking about this as a head and shoulders pattern. This is where off the charts listed as a short when it broke the 8 and 21 day. Long as it stays below this and continues, chances are, at some point you could get this 180. It all depends on how you want to play it. I've been just avoiding this stock because to me it's been weaker and erratic, and I just don't like, shorting, and that's what's been working here. I liked when it was in a nice trend above the 8 and 21 day. That was a nice bread and butter move. This was also another one. Now, you could actually see the bigger picture here because that's what you look with high momentum names and trends. Once the trend starts changing, you have one that it's still above here, and then you have this one that it pretty much broke and has been on the right side since. And here is, I guess, would be a really big level, 180-ish. So could get there if the market stays weak and if oil prices keep going lower, I guess. That's another thing. Oil. I didn't take any oil names home yesterday, even though they reversed, because again, that's where the obsessive headlines have been, and one day doesn't create a new trend, and I feel bad for those who took it home because you got pretty trapped today. XLEs, this is dangerous stuff, guys. Just to show you how trends change, and I want you to start honoring trends. Look what happened here. right there. That was at the 200 day. That was besides this upper trend when it broke the 8 and 21 day. So you didn't have to know oil was going to go into the low 60s or 50s. You could have just got out here when it broke the 8 and 21 day or the 200 day. When something's below the 200 day, that means institutions are selling it, especially if it doesn't reclaim it. So that's not something you sit and you hold. So with that being said, you go a little closer, and you got a small red dog reversal here. So if you took a third home, you lost in the third. But that's why you only take a third, especially when everything's below all these moving averages. OAHs, I'm sure, looks the same. Little green day yesterday, and still below every moving average. So you have to be very tactical with situations like that. And if you want to look at when this trend broke, so you can learn in the future, if you're sitting here holding your breath going underwater, right there, that's when it broke the 8 and 21 day. Or you could even draw another one from here, boom, and this is when it broke the 200 day. What did I just say before? If something gets below the 200 day, stays below the 200 day, you avoid, and you don't have to worry about something like this. Then you had another, bear type flag here, and when the market rallied back up, it never really did, and boom, down there. We'll see what happens. I'll go over this at some point in more depth for next year. Maybe there will be some type of January effect there or buying opportunity, but who knows? I was talking to my guys who were writing the thesis, and one of them was like, if oil goes below 55, the junk debt market for a lot of the drillers and all those names, there could be a lot of defaults, and that could be where the volatility hits, for next year. First volatility, then maybe opportunities. We'll figure that out as it unfolds. But for right now, you don't catch a falling knife. If you're looking to get involved in some of these oil names, what I suggest is do some kind of option strategy. So at least your risk is premium paid versus, down another 20, 30%, because, these things have been crushed and no one thought it would. I think guys on, Fast Money were saying 2 months ago to buy some of these because they thought it would be an activist haven. And, that's just speculation, not using charts or wherever. I like those guys, so don't get me wrong. A lot of them. Some of them I don't, but whatever. The banks also gave you a little bit of a clue, that today might not rally because Goldman Sachs was downgraded. So it didn't blow it off in the first 30 minutes or so, and now this is back below the 8 day. Okay, so this is starting to get a little wishy-washy. It went from a nice calculated trade, which I actually sold it into this. Okay, that was nice. I sold some into that, got out of my leftover, stopped out of the rest. Nice calculated trade above the 8 day. Didn't go to it yesterday, and I was actually a little upset about it. I was like, wow, I can't believe I didn't buy Goldman. Well, I guess I got a little lucky, and now it just needs time again. Bank of America acted a little bit better, but if one bank like Goldman can't, get a bounce, and now they're talking about lower rates again, and this and that, I'm not in there. And especially when you get a little small reversal like this, it tried to be strong. If you were in it from yesterday, when it went above this 1760, you had a little spike. Maybe you sold some strength and it went below. You got out, or some people might have even shorted, saying this is a high, this is a lower high, and you might get something into here. So, but for me, not as calculated as it was into that doji. That's why you do. Day one you buy, day two you add. This was okay, and then day 3, 4 you don't chase, you sell, and then you figure it out. Something like Google, also, it's been in a broken trend and not much here. Guys were trying to get me in this yesterday, like, Red Dog, look at the size of this candle. I'm like, what, I'm just not good with Google lately. It's below all the moving averages. It has a lot to prove, and boom, traded above the prior high. If you had it overnight, you could have used this 536 as your stop, push through it, and then not enough momentum, came back below it, you sell it. So this one actually gave you a little bit of time if you kept the third on for that strategy. So at this point, volatility's up, which is good. It'll create a good little trading environment for longs and shorts. Hopefully, in the next few weeks while everyone's going on vacation, it'll put some attention back on the market. If we were just hanging out, grinding up 5 handles and getting to 2100 like everyone thought had to happen, the trading wouldn't have been as good. Now at least you have some volatility, you have some ranges, there'll be some moving averages to buy, some pivots to respect, some relative action or relative strength or weakness to see to buy or short, and could create a better December. So we'll see what happens tomorrow. We'll see how the market opens. I'm glad the Christmas party was last night, because I think tomorrow you're going to want to have all your wits about you, because it could have some good action and some good opportunities, and there's a lot of them today here as well. And once again, I apologize that the virtual trading floor was down all day. You didn't miss much. I didn't do anything. I stayed flat. Granted, it would have been better to be short, after 10:30, but being out of the way is half the battle, and cash is a position when things aren't conducive to your style. Hopefully you respected the moving averages, respected all of the price action we've been seeing, and you didn't get hurt on a day like today, and maybe even made a little bit of money. See you tomorrow morning at the call. Have a good night.